So how do you justify when mNAV goes above or below 1? When you buy an equity, when you buy any kind of asset, you are paying a price today for what you assume the price will be tomorrow. You are looking into the future. You are essentially trying to say, I'm willing to pay this price now because I think it'll make me more money tomorrow. Well, how do you bridge that gap? You cannot know the future. So if we cannot objectively know the future, we cannot possibly make objective statements that says a PE ratio or mNAV or whatever should be this value. Now, volatility cuts both ways. If you really want to upend the market, I think you do that by putting up at least a portion of the Bitcoin for that consideration, for considering lending, considering generating yield. I think it's something you should consider. Not the whole stack, but a portion of it. And I think that's something that some treasury companies that get to scale are going to start considering. I do think it's going to happen. Do I think that you're going to see a situation where Strategy is releasing weekly regenerated X amount of dollars from cash secured puts and X amount of dollars from covered calls? No. Do I think that there's a future where they can do so advantageously? Yes.
Hey everybody, Tyler here with the BitcoinTreasuries.net podcast. Today I'm joined with Adrian Morris. He's a True North member, a longtime Bitcoin investor, an Mstr equity analyst. And what else have you been up to, Adrian?
Just got back from Strategy World in Vegas. That was a fun event. We had True North World as well, the second one, on as part of that event as well. That was great. It's always very, very fascinating having people say that they watch you. You know, it's still something I'm getting used to, but that they watch you and they're very interested in the things that you say, and they're interested in meeting you. It's always very, very fascinating. I also ran into a lot of different people in the space. So like Norma Chu, Andrew Webley, of course, Michael Saylor, Fong Lee, had some conversations with all of them. So it was fun all around.
Yeah. And you guys put on a great event. It was really kind of cool to connect both with you guys at True North members and the larger community on the whole. What was your takeaway? And you mentioned you talked with Bitcoin Treasury executives from strategy on down. What was the general sentiment among executives that you talked to at Strategy World?
So when it comes to Saylor, he's always laser focused, right? So when I spoke with him, he spoke about stretch. He spoke about the price action. He spoke about the fact that they're laser focused as always. So his conversations are always very, very refreshing in the sense that he doesn't waver, right? And when it comes to the other conversations, I had a brief conversation with Andrew Webley. He's very, very positive, very, very focused. They recently got uplisted, I believe, in London, Smarter Web. So they are going forward with their plan as well. Norma and I do advise for DDC. So Norma and I talk a lot. She and I talk a lot, and we met up. We talked about life, about Bitcoin. I actually recorded a podcast episode with her, with something that she's working on. So stay tuned for that. But she's always very, very upbeat, highly energetic. I love her energy. It's great. And everyone else I spoke to, they all have the same focus. The Bitcoin Treasuries space has has grown so much in the last 18 months, right? First, it was just strategy. Then it was for a while, it was Similar Scientific, and then you get Metaplan and so on and so on and so forth. So now that I think that things are getting, I wouldn't say yet steady state, but they're no longer novel. I think the market's waiting for what's next. And I think a lot of the executives are looking towards what's next, and they're looking towards different ways that they can innovate in the space. So I'm very, very excited to see what comes.
Yeah. It feels like most everyone in the Bitcoin Treasury space is just has so much to be excited about and things to look forward to. Obviously, the biggest news I would say in the Bitcoin Treasury space over the last 9 months has been the delivery of digital credit to the marketplace, right? So the flagship product, of course, now is Strc Stretch from Michael Saylor. They have another number of other preferred equity products. We have Strive, who also has their SATA product, which is very similar in fashion to Stretch, just maybe a little bit smaller. But it's really cool to have seen the volumes climb on this. And at Strategy World, Michael said something to the effect of, once you find your premier product, you need to just hammer it home and really focus on that. What's been your take on how well the market's received Stretch? We've seen it trading near that par of 100 recently, and the volume is just incredible.
Yeah, so that was actually one of the things I brought up to Michael. I said that, one of the things that surprised me is that in the last, I would say, 2 months, I get constant questions about Stretch. People are DMing me, people are asking me questions about it, people are very, very interested in it. And it's from a wide cohort of individuals. I have individuals that are, my father's age, so retirement age. I have individuals that are millennials like myself. I have individuals that are Gen Z, of course, Gen X. Like everyone is interested in it because who doesn't like the concept of a monthly dividend? You put your money in it, you earn some yield on your money, and it's something that's very, very attractive. And I think that based on the conversation I had with him, they knew it would be well received. I think that they're pleasantly surprised that it's been so well received so quickly, and that it's reaching a state of maturity at a much, much more accelerated clip than I think a lot of people anticipated. I don't know what they anticipated internally, but I know that they thought it'd be successful. But the fact of, like you just mentioned, the volume has been great. Before I got so bogged down with other stuff, I was doing like the weekly analysis, watching the volume of stress just tick up and watching the volume overall. I think that people just don't understand that strategy has really pitched a whole new series, a whole new kind of class of products to the market, and the market's eating it up in stretch. And the longer stretch maintains that peg around $100, the more capital is going to attract, and the more the narrative and the sentiment around it is going to cement. Because when it first got kicked off, it was all sentiment, right? And what people don't realize is that the sentiment kicks it off, but then the narrative builds, and then the structural forces take over, and it becomes this whole kind of reflexive process. But it must move through those stages. And I think what we had was the initial interest stages, of course, with the initial offering and the initial capital raise, and now we're seeing it reach steady state. And just watching it meant stay around $100 as Bitcoin's been going down, as the MSTR common stock has been, experiencing as usual short attacks and whatnot. It's been really, really refreshing. So for me, I think that watching how it performs this year and next, as we seem to be in bearish territory, is going to be very, very telling. If it maintains and if it performs, if it holds that peg around $100 very, very well with not too much drift, below, I think that says a lot about the offering, obviously, and it makes it a very, very powerful tool in strategy arsenal. A lot of people are saying that, oh, it's only good in a bear market, not good in a bull market. It's like, well, I disagree. If you Just because you're in a bull market doesn't mean you put every single ounce of capital you have into the market and just keep it there, right? People are going to be taking profits at various times. People are going to have different incentives. There's no reason to say that stretch is only going to be popular and profitable and really, really interesting in a bear market, but it's not going to do well in a bull. I think that they're going to do well in all markets. I think it's going to make them relatively market agnostic once it starts to scale. So those are just some of the biggest takeaways for me when it comes to stretch.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For Treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, I agree with you, and I think it's a product for all markets, right? As long as they're really careful about the issuance in bull markets, I think that Stretch can really maintain that peg through all markets. And one of the themes at Strategy World, both Matt Cole and Fong, CEOs of the companies who are offering these perpetual preferreds, was the seasoning, right? It takes often 3 years before institutions are really convicted to be able to put upsizings of capital into products, into preferred equities, into bonds. So I'm really keen to see on how that market takes shape through the next bull market, and once those products have been on the market for 3 years or so. I mean, we've got $8 trillion in money market funds in the United States right now. How is that money? Do you see a large percentage of that type of money rotating into Stretch over the next decade if it really can prove to be this killer product?
Well, so here's where I'm going to be somewhat contrary. I don't think so, but I don't think it needs to. We don't
Mhm,
need to take a huge chunk out of trillions of dollar market. We need to just take a little sliver.
mhm,
If Stretch takes, I don't know, 500 billion, is that a failure? Do they need to take it? Let's say they take 100 billion. 100 billion of consistent interest in Stretch allows strategy to be able to issue shares in the market, buy Bitcoin, build a cash position, fortify their business, invest into the BI business because they still say that they want to do that. I think this will just do well for them. And I think that it doesn't need to be an overwhelming success for it to be an overwhelming success. They just need a small sliver of the market. That's all they need. And I
mhm.
think that over the next decade, that sliver is going to grow and that pie is going to grow. But by no means does Stretch need to kick down the door of all these of this market and take a giant share of the market. I think that Stretch can just have a proportionally significant share of the market when you consider strategies market cap, when you consider their holdings, when you consider the dividend obligations it will create. And it can create a very, very self-sustaining reflexive system within the strategy equities that can make the company very, very successful.
Yeah. How do you think about the other preferred equities that strategy offers? Um, Obviously they came out before, by and large, before Stretch. You've got Strike that has that convertible to common equity component. I think that gets really interesting in a bull market. But were those earlier products, just kind of the test case where Michael Saylor was trying things out, or do you think Stride, as a junk bond style product, at least fitting that part of the capital stack and that risk factor, do you think those will um, gain more interest maybe as those season as we move into a bull market in the future, Adrian?
So, like I mentioned with Stretch, I think that Stretch is the one that makes strategy relatively market agnostic. So when I say market agnostic, here's what I mean. Everyone talks about Saylor always buying the top, right? He's always buying Bitcoin. That's because they're relatively price agnostic when it comes to Bitcoin. They have a very, very long term view. And with a price agnostic view, they don't care what the price is today because they're focusing on what the price will be tomorrow. So the overall thesis, the overall drive for acquiring Bitcoin is we're getting as much Bitcoin as possible now to fortify our balance sheet, to increase our potential future credit worthiness, to increase our potential collateralization ability, because so that we can be well positioned when this thing really takes off, right? So Stretch, I think, serves that purpose. It makes them relatively market agnostic, while in the previous years they've only been price agnostic. With Stride, with Strike, with Strife, I think those will do better in a bull market solely because they're more tied to the equity's performance. So
Mm,
Stride has the highest correlation, or will be tied the most closely to the equity performance, followed by Strike and then by Strife. And they all pay a dividend, but they all pay a dividend quarterly. So it is an entirely different kind of instrument with those three than with Stretch. The quarterly dividends, the kind of performance you will see, as you notice with Strike having the convertibility factor, Stride being the junk bond, Strife being the higher quality bond. they just offer different things to different participants, and I think they would do better in a market where the price action is teetering up. And I think
Yeah.
that the volume on those will show that. But as you've seen with the price action, Stride has been hit very, very hard. Strike at one point was outperforming, and Strife at one point was staying at par. Right? Those are three very, very different cases of performance, which kind of mirrors how the market's perceiving them. So I do think that they, in many ways, yes, they could have been a testing ground for for the notion of preferred equities, but just like Matt Cole said and Fong Lee said, and just as I'm aware, and people I think are becoming aware, it is going to take a while for all of these to hit steady state. And hitting steady state is going to take a few years, and we're going to see their own market niches and their own trading dynamics start to build out as market sentiment shifts around them, as narrative builds around them, and as they get that buy-in from the market. Then we'll be able to see what they can do with them. But I
Mhm.
think that the people that are writing them off right now are being far, far too premature, just because the
Mm.
price action hasn't been and the volume hasn't been there.
Yeah, like you said, those ones that are not as price agnostic, be interesting to see if the volume and demand really does come into those in a bull market. And I think even Stretch could, um, in a bull market, really see some increased demand, just because the collateral base is so much stronger on Strategy's balance sheet. If that happens, say we're in a bull market, a year down the line, 6 months down the line, Bitcoin's price is ripping and funds are rotating more into strategy. Maybe it takes a couple more years, but um, when we're in a bull market, when we're in a preferred equity bull market, um, how is Saylor and the team at Strategy going to resist the urge to maybe over amplify their Bitcoin holdings? Do you think they've got the built-in risk management? Because this is the this is the first they're the ones who are writing the playbook, writing the script for this whole thing. How are they going to maintain that balance, and resist the urge to, I guess, over lever their balance sheet?
Well, I think that we've already seen that they're quite disciplined when it comes to leverage on their balance sheet, right? People that have often called their leverage into question and say that strategy is heavily leveraged, they're not paying attention. They are not heavily leveraged by any means. So when it comes to, are they going to try to crank up the amplification in terms of the Bitcoin amplification? No, I'm not very, very concerned with strategy all of a sudden becoming very, very aggressive or overly aggressive with what they're doing. I think they've been very, very methodical with what they've been doing, contrary to what narratives seem to say. And you've had a variety of narratives with the ATM equity offerings and with the leverage and with, oh, is Saylor going to get margin called? You've had all those talking points, right, that just don't have any basis in reality when you really look into the capital structure, when you really look into what the company has been doing. And all that takes is for someone to read a 8K and a 10Q and just actually educate themselves on the market. And that's what we try to do in True North, right? We try to put that information out there in a way that is well structured, easily accessible, and factual. So I think that we've been doing some work with regards to that, and we've done a lot of great work. So no, I do not think that there's any real risk with strategy blowing up what they're doing or becoming overly aggressive and putting themselves in harm's way. If anything, they are more inclined to try to innovate their way out or engineer their way out than lever their way out. And I think we've seen that with the preferred equity offerings, right? Otherwise, why wouldn't they have just done more convertible bonds? They're well aware of the short interest that it creates on their equity. And sure, it is interest-free cash, but there's interest-free cash with a lot of caveats and a lot of structural risks that come with it, right? And they've learned that lesson. But again, they're doing this kind of real time. They've been learning this as they go along because they're quite frankly, they're the first ones to do it. So I don't think I think they're more likely to innovate their way out than lever their way out. So I don't that's not a concern for me.
Undoubtedly, I think you're right. They've shown the ability to change gears and to innovate around this entire Bitcoin accumulation strategy via public equity. I almost think that the convertible bonds were just like a necessary step on the way to the preferreds. Saylor was kind of like learning this thing and needed to access capital markets where he could and kind of train the market, so to speak, on what a public Bitcoin balance sheet kind of looks like. When How big of an unlock for you was the US dollar reserve that was kind of spearheaded by Strive, and then we saw Strategy also kind of put a couple of years worth of dividends, as 18 months of dividends on the balance sheet. Was that important to dispel the FUD and the narratives that were out there, or do you think that is really essential to any company who's employing this kind of strategy, Adrian?
So that's actually one of the areas where I've been somewhat critical of strategy. I've talked to several executives in the space about building a cash position, and I did that over the course of the last year, and it was something that I think that many were not receptive to initially, because the focus was Bitcoin, 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 right? But my thought process was that's great, but coming back to the point I made about price agnostic versus market agnostic, price agnostic is great when the market's operating and the bull market's running and you have a heavy multiple on your equity. Doesn't quite work when the market turns against you and now you have to find a ways to become market agnostic instead of price agnostic, right? You have to be able to execute when the market is in a downturn. Now, a cash position is a way to do that. Strategy took the approach of saying we're not going to build a cash position first to potentially find new ways to fortify our balance sheet. We're going to use our balance sheet fortification to issue the preferred equities. Then we're going to bolster that with the cash. So they just went about it a different way, but it's pretty much the same structural conclusion. Cash on the balance sheets will serve them well in the long term. And the longer they have that cash position and the more it grows, the more the market is going to have to account for it. 2 billion and change right now doesn't seem like a lot, but eventually I see them having it to 3 billion, 4, 5, 6, and I think that would serve them well if they have a very, very strong balance sheet that's fortified by Bitcoin and the collateral. They have a very, a large, not a very large, but a large enough cash position that the markets now have to forward model. And then when you're also in a bull market as well, all of these things coalesce into narrative and sentiment that helps fuel the price action that the equity is going to see. Because there's structural considerations, there's narrative considerations, and there's market sentiment considerations, right? All of those need to coalesce to create a very, very formidable narrative and a formidable concept around the equity that the market can really dig their teeth into, that goes beyond Bitcoin number go up, therefore strategy share price should go up, right? I think the market has moved on from that, and strategy is adapting to that by building out this cash position. So I think that it does a lot. The biggest piece that, ironically enough, people are discounting was, oh, how are they going to pay the dividends? Blah, 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 blah. Okay, great. Now they have a cash position. They have the ability to pay the dividends for 2 years. And now they're saying, well, why do you have a cash position? Or what happens after 2 years? So the goalpost keeps shifting. So no matter what they do, the naysayers are going to still exist, right? So they can't constantly adapt to that. What they can do is put themselves in a position to succeed regardless of market activity and regardless of underlying market structures. And I think that's what a cash position does. It helps them along those lines.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, when you think about the right cash position for, say, strategy to have, is it a certain months of dividend coverage? What is that magical thing, or is it just a magnitude of the total assets on their balance sheet that should be in cash? What is the formula, Adrian, for how they should think about this? Saylor's going to try a lot of things, but what's your position on how much cash they really should be carrying?
I personally think so let me answer your question bit by bit. Do I think there's a formula or a specific number? No. And I think that anyone that tries to say that there is being somewhat simplistic because the market is going to adjust and you're going to have to adjust to the market. If you are in a prolonged downturn, so let's say Bitcoin goes down to 40K and it stays there for like 2 years. At that point, having $2 billion seems to make sense, right? Because you have hindsight being 2020 in that case, where you say, okay, well, now we have the cash position, so therefore we can use it and we can, pay out the dividends and we can be structurally sound. However, if Bitcoin starts to rip and it goes to 150K, they'll then find that they're going to get criticism probably again for having the cash position. And people will say, well, why aren't you just buying Bitcoin? You should have been buying Bitcoin this whole time, regardless of what the dividend requirements are and the dividend obligations are, right? So I don't think there's a formula. I think there is a narrative and there is a benefit. The narrative is we have X amount of dollars to cover our dividends for X amount of years, X amount of months. The benefit of that, the structural benefit of that is it is on your balance sheet and the market is going to have to adapt to that over time and forward model that. As the price of Bitcoin ebbs and flows, as the price of the equity ebbs and flows, having that cash position on the balance sheet lends strength to the overall capital structure. And I think that very, very simply, as Bitcoin's price grows, as the dividend obligations grow, as their overall net asset value grows, I think it's logical that the cash position should also grow as well. I'm not saying that should grow proportionally, but I'm saying it should grow. Because if at some point in the future Bitcoin's at $250,000 and they are, 500 billion market cap or something like that, but they only have a $2 billion cash position, I think that looks somewhat strange in terms of market narrative and perception. However, if they have a $5 or $10 billion cash position that they are saying to the market that, look, yes, the equity is seeing a multiple right now. Bitcoin's price is cooperating. Our net asset value has grown, but we haven't lost track of the fact that our dividend obligations are still a primary concern and focus of our investors. We haven't lost track of the fact that having a cash position helps bolster the overall balance sheet and the overall market perception of the equity. So I don't know if there's a formula, but I do think that there's there's benefit to having that cash position. And I think that they are going to be navigating that in real time, and the impetus for how much they add to it and how much they don't add to it, I think is going to ebb and flow.
Yeah, that's an interesting perspective, and I think it's important that they are going to take a more qualitative approach to kind of stay ahead of the market and respond to the market. Because if you're just telegraphing the playbook, like we saw, last summer when Saylor said he wasn't going to issue ATM, I think when mNAV was above, was below 2.5x, right? They had to immediately reverse course, obviously, and in hindsight, that was a mistake. But they were able to self-correct really quickly. Let's talk about mNAV a little bit. You're well known for talking about how mNAV is sentiment of the market. It's not some magic formula that we can completely derive about when to invest, when traders should be necessarily moving for or against the strategy common share market. But the way I kind of view it, it's a bit of a heuristic like model for me in bear markets and bull markets for a more pure Bitcoin treasury to say, okay, here's where market sentiment is. Can you talk more about how you view mNAV generally?
So a few things. When you spoke about the mNAV guidance, right? That was another thing that I was very critical of strategy over, because I said that mNAV was sentiment. It's not a lever that they can pull and control. It is something they're going to have to be able to respond to and take advantage of versus guide themselves. They have no way to guide mNAV or to impact mNAV. And people thought that they reversed course, but the thing about it is, when they issued the guidance, they said it was at management discretion. It's just that management discretion came a lot quicker than people liked. So, and that is what got them into hot water. But them issuing the mNAV guidance was one of the big faux pas that I think they made, and it was just not a wise move. But I think again they were responding to what they were seeing in social media, but the market itself, the market isn't represented on X. It just isn't. If you look at the trading volume, who's pushing this market are institutional players and large players, right? So that is not something that I think the market largely cares about. So with that kind of framing, let's now move into mNAV and why I say mNAV is sentiment. So when I think about something, I do not do so just at the immediate level and then the level above, right? I'm trying to distill it down to its most digestible pieces. I call it creating decision pairs, right? So I force myself into an either or kind of a dynamic. So if mNAV is not sentiment, what is driving it? What is pushing it? What is the mathematical formula to actually say that for this price of Bitcoin for this number of shares, mNAV should be this? I went through it, I researched it, I contorted it, I was calculating it manually. There was no real rhyme or reason to what mNAV was. So then I said, well, if mNAV isn't sentiment and mNAV isn't sentiment driven, I should be able to find some kind of a relative way of calculating this, right? Or kind of projecting it, so modeling it. But projections were all over the place. So I came back to my natural inclination to say that, well, what is actually driving this? Is mNAV sentiment or is mNAV not sentiment? So going along the lines of mNAV being sentiment, what does that mean? Well, here's why I say mNAV is sentiment. For an asset-based valuation, if the market was trading it at a multiple of 1, what they're saying is the value of your Bitcoin holdings should be the value of your equity price per the shares, right? Whether you use enterprise value, whether you use the more traditional calculations of mNAV, it's essentially breaking down to say that if your Bitcoin holdings are X, your multiple should be Y and it should be 1, right? That's trading at parity. So how do you justify when mNAV goes above or below 1? What is explaining that? And that's market sentiment. And I say that because when you buy an equity, when you buy an asset, when you buy any kind of asset, you are paying a price today for what you assume the price will be tomorrow. You are looking into the future. You are essentially trying to say, I think I'm willing to pay this price now because I think it'll make me more money tomorrow. Well, how do you bridge that gap? You cannot know the future. So if we cannot objectively know the future, we cannot possibly make objective statements that says a PE ratio or mNAV or whatever should be this value. There's no way for us to know that. So the reason why I say sentiment is because when people think of sentiment, they think that means emotion, but that's not really what it is. Sentiment, in my view, is a bit of a dance between perception, between judgment and conviction. So perception is how you perceive the equity, right? You're taking in the equity, you're looking at it, you understand what you know about it, you understand what you know about Bitcoin, you understand what you know about, different market dynamics and so on and so forth. But all that's impacting how you're viewing the equity. So that's perception. All of your personal biases come into play. Judgment then is, what does your perception lead you to? What are you learning about the equity in the market in terms of price action, in terms of how much money you have to allocate, in terms of what you think it's worth, in terms of all of that information? How are you then driving that information together to make a decision? That is judgment. Conviction is the allocation of capital. Once you've perceived it and once you've made a judgment based on your perception, how do you then allocate the capital? All of that is market sentiment. So that is what leads me to say that mNAV is sentiment, because if you cannot objectively know the future, but yet still you're buying an equity thinking the price is going to go up, there's nothing objective that's driving that, because there's no objective way for you to know what the outcome is. And all we really do is we have perceptions, we have judgments, and we have conviction that helps us rationalize that and form a valuation. And that is what's driving all of the impetus into all equities. I'm giving you a very, very distilled down version of it, but essentially, mNAV as sentiment isn't me saying mNAV is driven by emotion. Sentiment, market sentiment is perception, it is judgment, it is conviction, it is valuation, all of that coalescing into a decision to allocate capital. And ironically enough, once that allocation happens, people then try to say, well, then what about algorithms? And what about all these other things? Well, still, we can get into that if you wanted, but it's still all sentiment derived. Sentiment is the first cause in the markets. And any kind of deviation from a parity of one, whether it be a price to earnings multiple, whether it be mNAV, whether it be whatever multiple you want, the baseline is always one. Because when they say, well, it has a PE ratio of 15, it's like, well, 15 times what? It's not 15 times 2. It's not 15 times 4. It's 15 times a baseline of 1. When mNAV is 1.1, 1.2, 4 point whatever, it is a baseline of 1. Any drifts above that historical parity or natural parity, so natural parity is for asset-based valuations, which is what I call it. Historical parity is that traditional markets, they typically have an average of a PE ratio of 15. So that parity always starts at 1. Any drifts or above or below 1 cannot be objectively proven, because we're looking into the future. That is why mNAV is sentiment, and that is why, in my view, markets move on sentiment.
Yeah, that makes a lot of sense, Adrian. Thanks for really distilling that down for us. We've got a lot of capital allocators and would-be capital allocators to the space watching. We have executives and treasury teams watching. As we move into, we're in the bear market, sentiment is low on Bitcoin treasury stocks, and allocators have seen kind of this one quick little speed run cycle with Bitcoin outside of strategy with us talking about mNAV in the marketplace. Do you think capital allocators who are maybe more tourists or just looking for a trade are going to try to front run sentiment by using mNAV? Do you think that that's a little bit too too blunt of an object that large pools of capital are using? And on the flip side, for the treasury teams, how should they be thinking about mNAV as a tool that's informing them, or is it just something that's kind of interesting for us to just gain the pulse of the market?
I think that capital allocation comes down to, in my view, what is a durable narrative. And if you take a look at, and if we just contrast it against the AI trade, so you have Nvidia, Meta, Tesla, Microsoft, Palantir, so on and so on and so forth, right? The reason why they've sucked so much capital from the market is because they have a durable narrative. Everyone is calling AI a bubble, but what they're missing is that even if AI were a bubble and it were to pop, even if it were to drop 50%, it is still trillions and trillions of dollars. And the progress that has happened in AI is not going to go away, right? So is that a bubble, or is that just a cooling of the narrative? So when you think about mNAV and applying that to treasury companies, I don't think you can front run it, because, again, coming back to the framing that I have for structuring this kind of a concept, if markets are forward looking, we are constantly trying to forward model what's going to happen, right? mNAV looks into the past. You can only view mNAV or a multiple after it settles, right? And it's going to ebb and flow. It's not as if the mNAV is going to be 1 on Thursday and then it must be 1.1 on Friday. You're always looking into the past when it comes to mNAV. So trying to market and model that forward is very, very difficult, and I think self-defeating, because there's too many things that are going to cause market sentiment to shift. So I think that mNAV can be a useful real-time guide for these companies to say to themselves, the market's clearly not cooperating right now.
Hmm.
mNAV is low. Perhaps we are not in the best position to um, issue equity, right? They can theoretically say that. But on the flip side, and this is one of the things I've also been very, very vocal about, issuing equity is not impacting the price. I've actually modeled this out statistically. So when it comes to issuing equity or taking advantage of the market, mNAV is not going to drive that. It's going to be trading volume. Strategy has some of the most robust trading volume and the most robust options market in the world. If you take a look at options volume by day, strategy is always in the top 10. Think about that. They're in the top 10 with companies like Nvidia, Tesla, Palantir, Microsoft. They're in the top 10 when it comes to options volume. So when you have those kinds of data points, how can you rely on mNAV for anything? Strategy has been issuing shares right now when mNAV has been suppressed and people have been critical of it, but I've been looking at the trading volume. They have the trading volume to justify it.
Hmm.
And that's what they've been doing. So I
Hmm.
think that, mNAV is a potential data point, but it should not drive decisions. I think that market activity is going to be a better indicator of the overall sentiment and view of your equity, more so than mNAV. And the reason why I say that is that even if mNAV is suppressed, but options volume is high, and you're seeing a lot of a lot of information through the put call spreads. You're seeing a lot of information through positioning. You're getting a lot of information from all of those things that's telling you people are essentially, in the case of strategy, using your equity as a way to place leverage bets on Bitcoin, regardless of the market activity. You should use that to say, even though mNAV is suppressed, we have the trading volume to justify this. Why not issue equity to buy Bitcoin? Why not issue equity to build up your cash position? Why not take advantage of this market activity while we have it? Because if market activity collapses and the volume collapses, you can still theoretically have a higher share price. What do you do then? Do you say that, oh, well, it's only the share price to be driving it? Do you see what I mean? Like there's too many different things for anyone to say mNAV is what's guiding activity. So if you're
Mhm.
asking me, are capital allocators or hedge funds or whomever going to try to use mNAV to front run it? If they're doing what I'm doing, and I think they are because these are individuals that I talk to get ideas of how to model this stuff out, they know mNAV is a lagging indicator.
Hmm.
They're not going to forward model too aggressively using mNAV. They're looking at other things. They're looking at options volume. They're looking at trading volume. They're looking at option spreads. They're looking at the dynamics that exist in the broader market to make decisions around how they allocate for MSTR.
Yeah, that makes a lot of sense, Adrian. And to your point about, Saylor issuing shares when volume is high, even though, you know, mNAV sentiment might be low, price is low. I think at least like when you look at X, when you when you read sentiment in maybe some of these Bitcoin Treasury groups, they've been very critical of Saylor. But it sounds like you and him may agree more than the rest of at least the retail community on X about issuing shares in a bear
Well,
market. Why do you think there's such a disconnect?
my blunt, honest answer is that people are emotional.
Hmm.
The share price is not doing what they want it to do. They are not seeing that return on their investment. And it's very, very natural for newer entrants into the market or for market entrants in general to have a reaction to that. But one of the reasons why I've been doing such, deep analysis on it, I've been going into this conceptually, is because, quite frankly, I've been burned in the markets before. So I've learned those lessons. So I'm less inclined to react to something without doing some analysis on it. And once I got into it and I really started modeling this out, I want to be very, very clear. I'm not agreeing with Saylor. I'm agreeing with the data. The data has shown me what is driving price action, what is impacting price action. It's not issuing shares. mNAV is not a significant predictor of anything. And Saylor, Fong, the team at Strategy, they do not have any lever that they can pull to impact share price. What they can do is create an environment where sentiment can flourish. And that's essentially what they're doing now with the cash position, with the preferred equities. Just imagine the kind of market dynamics that exist when they have 5 preferred equities, they have the actual common stock, Bitcoin's running, mNAV is starting
Mhm.
to run up again for a whole different set of reasons, because in the past it was entirely sentiment around Bitcoin. Now it could be sentiment around Stretch, it could be sentiment around the common stock, it could be sentiment around Strike. It'll be the options market, it'll be the spreads in the options market, it'll be a lot of different things that will have a disproportionate impact now that it has a more mature market narrative. And I think that's what they're positioning themselves for. So it is not just that it's not that I'm agreeing with Saylor. I'm looking at the data and I'm seeing what's been going on in the price action. I've modeled it out over going back 2 years now at 3, 6, 9, 12, 15, 18, 21, 24 month intervals. I've been doing this for quite some time, and the message has been very, very consistent. There are many things driving the MSTR price action. Saylor is not one of them. So, and that is not me trying to absolve him of anything. That is just me telling you that is what the cold hard facts and the data have shown me.
Yeah. Well said, Adrian. When we think about Bitcoin treasury companies, of course, we're tracking at bitcointreasuries.net hundreds now public companies around the world that are adopting this strategy in some form or another. Some of them are more pure Bitcoin treasury balance sheet companies. Some of them have operating businesses, but I think we're really early days in the yield generation. Generating a yield on their Bitcoin stack. Now, when I say that sends shudders down the spine of anyone who's been around Bitcoin for a lot of years, right? And rightfully so. However, there are as there's been many blowups in the space, there are a lot of Bitcoin native firms out there who have been running a derivatives playbook, who have been running lending strategies and different yield strategies. Some of them may not work out in the future. Some of them may continue to persist as this market continues to grow and more capital comes in. How do you think about putting your Bitcoin stack to work, not as an individual, but as a Bitcoin treasury company, trying to find some alpha and distinguish yourself in the market? We've got MetaPlanet, of course, who was one of kind of the first movers there, and they've done some things with selling puts and covered calls on their Bitcoin stack. Do you think we see more of that? Are there other opportunities, or how would you be thinking about it if you were part of a Bitcoin treasury team? And I know you're an advisor to a Bitcoin treasury, so I don't want you to speak for them, but put your hat on and talk about yields, and talk about as well, should Michael Saylor be looking to generate yield, or are capital markets his baby and he should remain laser focused on that?
So I have a few thoughts on that. In terms of generating yields, there are a few ways that you can do it. You already mentioned it, right? You can do cash secured puts. So if Bitcoin goes down to the price that your put, the strike price of your put, you get additional yield in terms of getting paid to wait. Essentially, then you buy the Bitcoin, right? So that isn't directly generating yield on Bitcoin. That's using cash while buying Bitcoin to be able to get the yields. Then you
Hmm.
can do covered calls. I mean, everyone watching this probably knows what those are, so no need to go into that. Now, where I think there's nuance here is that in the case of strategy, they don't want to be reclassified or lose their position in any of the indexes by being reclassified as like a hedge fund or a financial company, right?
Mm.
So they
Mm.
can't generate a ton of yield or a ton of capital on their Bitcoin without running that risk, right?
Yep.
And I think
Yep.
it's something along the lines of, and I really need to look into this because I think the number is that they cannot have more than like 45% of their income coming in from those kinds of activities, right? So if you think about it, that's a large number. Okay. Now, where I differ in the sense of why I think considering generating yield in your Bitcoin could be something that's beneficial is that, Saylor often says volatility is vitality, right? Now, I know his perspective, just based on the conversations I've had with him, is you do not put your Bitcoin at risk. However, if you are looking to do what I call change the volatility profile of your equity, you have to make it inherently more risky. The market would have to perceive it as more risky, as more volatile, right? So the volatility comes from a variety of different means. Volatility is essentially the direct volatility is a result of, just think of the fight in the market. Some people think it should go higher. Some people should think it should go lower. That friction in the middle, that's volatility. Implied volatility in the options market is what I like to call sentiment about sentiment. That volatility is sentiment about where people think the price should go. So implied volatility is in fact derivative sentiment. What it's saying is, now that we have an idea what the market thinks the price should do, how much higher, how much lower, what's going to be the amplitude of that move. That's what implied volatility is. All of that will be impacted if strategy and these other treasury companies that have the volume to justify it were to come out and say, we are now actively using our Bitcoin holdings to generate yield. Because the market is going to have to say, well, what is the additional risk of losing the Bitcoin? How would that impact the overall capital structure? If they're successful with it and they're able to generate a lot of yield, how much money can they generate from that yield? How much money can they use to buy Bitcoin? How much money can they use to add to their balance sheet? How much money can they use to put into the business intelligence side of the business? Do you see what I'm saying? The market being forward looking will have to now forward model all of those additional factors, which will increase the volatility of the stock, which will increase the implied volatility in the options market, which will increase the interest in the stock, which will likely increase the share price. Now, volatility cuts both ways. So it's not as if they're going to do this and then the share price is going to run. That's not what I'm saying. What I'm saying is, if you really want to upend the market and do one of those things that I said that can create an environment where sentiment can flourish, I think you do that by putting up at least a portion of the Bitcoin for that consideration, for considering lending, considering generating yield. I think it's something you should consider. Not the whole stack, but a portion of it. And I think that's something that some treasury companies that get to get to scale are going to start considering. I do think it's going to happen. Do I think that you're going to see a situation where strategy is releasing weekly, we generated X amount of dollars from cash secured puts and X amount of dollars from covered calls? No. Do I think that there's a future where they can do so advantageously? Yes.
Yeah, I think that makes a lot of sense. And, if they were doing it on a weekly cadence, that would be something where arbitreurs could just come in and kind of front run Saylor. So I think that would be a mistake. But yeah, I would like to see them, start to just try dabble in some of those cash secured puts or maybe selling covered calls against their Bitcoin. I think it makes a lot of sense and can provide some alpha. And if they try it and the market doesn't respond well, or they can't figure out how to execute, well, hey, they gave it a shot. Like you said, as long as they're not aggressively putting their stack at risk or aggressively generating income that exceeds their operating income, which would force them to be excluded from like the NASDAQ 100 or something like that. But I think you covered all the bases there, Adrian. We're coming to get up against time, but I've got one more big question about Bitcoin Treasury price action of the last few months. I think it's fair to say we're most definitely in a bear market. But why is sentiment in the larger Bitcoin ecosystem low, outside of maybe the people who are building in this? But for traders, capital has certainly exited the ecosystem. We had the ETFs in 2024 get approved. We had the FASB accounting changes. We had the regulatory environment massively improve when the new administration came in. We had, the Genius Act get approved, which is a little tangential or at least parallel to Bitcoin's market. We've got the Clarity Act on the horizon. We've got a Treasury Secretary and incoming Fed Chair who have, I would say, the most optimistic and rosy outlooks on Bitcoin that we've certainly had since the inception of Bitcoin. Why is sentiment still low? Are these bear markets just going to continue to hit us every 3, 4, 5 years? But why is price action where it is today?
Well, I'm not one that ascribes to the whole cycle theory. I think that Bitcoin's been following these cycles as a matter of happenstance more so than actual structure. And we can get into that another time as to why.
Yeah.
But when it comes to overall sentiment, I think there have been a few things. One, the AI trade that has sucked air out of everything over the last 2 years and change, right? And I've been invested in those equities, so I've watched it happen real time, and I've watched the market caps of those companies swell. So that's been a definite factor, and I'll get into why in a little bit here. Um, Gold, silver, the impetus for nation states and large banks to acquire gold and silver has been quite significant in the last 2 years. Gold more so than silver. Silver has been growing because of the industrial applications and the dual monetary purpose that it has when it comes to monetary utility, as well as, for EV build outs, for data centers, and so on and so on and so forth, right? So
Mhm.
we've had those precious metals and AI tens and tens of trillions of dollars being sucked in to those two things over the last 2-3 years, right? Now then you have Bitcoin. The reason why I say sentiment is so important is that Bitcoin is still building out a very, very its narrative, right? It's going through the boom bust cycles. It's still being established in the world as, what is it? Is it digital gold, or is it a different form of money? I don't know if it's as cut and dry to say that it's either or, but I also don't know what narrative is going to win out in the long run. I'm not sure that a narrative of it being a better form of money is more durable than it being digital gold. And I think that all of the narratives around Bitcoin are still being worked out. And whenever there's a new narrative that it becomes a secular trade in the case of AI, or becomes a nation state geopolitical trade in the sense of gold and precious metals, it's going to take the wind out of Bitcoin sales, because Bitcoin is still highly correlated with QQQ and risk assets, right? It's just trading like a highly levered beta stock. So people still are perceiving it along those lines, which tells me that the narrative around Bitcoin just isn't durable yet. And that's what we're seeing right now. When you have geopolitical tensions, when you have larger market narratives at play, it is only natural that people are going to sell what they can, and it's only natural that the new kid on the block, which Bitcoin still is going to lose momentum in those kinds of environments. That doesn't mean it's not successful. That doesn't mean it's not going to succeed. If we rewind the clock 5 years at around 70K, do you think anyone will be complaining? No, they would be euphoric. Perspective is everything. So in another 5 years, when we're down to 200,000 or something, everyone's going to be saying the same thing again, right? Oh, why is Bitcoin not performing? Why is this going on? Why da 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 da? The fact of the matter is, as long as we have the following macro and economic factors in play, Bitcoin is going to succeed. They're still going to print money. Inflation isn't stopping. The national debt is still going to increase. Bitcoin still remains an immutable, pristine, digital ledger that has shown itself to be resilient through 4 boom bust cycles, through various macroeconomic conditions, through various presidencies, through a couple wars, through a few fiscal QE cycles. Bitcoin is still here. So I think that the durability of Bitcoin's narrative is being tested again, as it must be. But people need to really understand something here. Gold and precious metals have hundreds to thousands of years of inborn, innately understood historical, social, and economical narratives, right? AI is a secular trade right now. What does that mean? It is not just about number go up. People are looking to it to be the next fundamental paradigm shift in everything: economy, society, government, tech, science, engineering, all of it. And they're trying to get on that train. They're trying to get in front. They're trying to front run that
Hmm.
shift. That right there is fundamentally different. That is bigger than what happened to the dot-com situation. I don't mean with it being a bubble. I mean
Yeah.
with it being a fundamental narrative shift. It's bigger than
Mm.
that by several
Mhm.
orders of magnitude. Bitcoin's competing against that. It's competing against those narratives. What we're seeing right now is only natural. Money was going to flow out of it into other things. Now you've got the whole situation with Iran. There's so many different things that are fighting for global narrative. I'm not that surprised that Bitcoin is being dragged down as a result.
Amazing, Adrian. This conversation has been so informative. Would you tell everyone where they can follow you online?
Sure. So my only real social media presence is on X. So it's @_Adrian. You can also follow a lot of the videos that I post with the gentleman in True North. We go live every Wednesday evening. It's 10 Eastern. But that's pretty much it. Look for me on X, follow me on X, ask me questions on X, and I will get to as many questions as I can because these days I'm pretty busy. But I enjoy the questions. I try to answer them whenever I can, and I really appreciate the positive feedback whenever I get it.
Amazing. We'll put that all in the show notes. And one thing I have all our guests say before they leave, Adrian, is stay orange.
Stay orange.
Thanks. Ladies and gentlemen, Adrian Morris.
Thank you.